these are the 6 currency pairs we're going to be utilizing. We're going to be utilizing the British pound Australian dollar, the British pound US dollar, the British pound Canadian dollar, the British pound Japanese yen, the British pound Swiss franc, and the British pound New Zealand dollar. Most of you can see these are all centered around the British pound, and that's for a reason, because we are trading the London session here. Now, what I'm going to do is I'm going to go ahead in here. I'm actually going to go in here and show you here the British pound Japanese yen currency pair, and I'm actually going to show you how this actually works. I'm going to go back to the beginning of the month here, show you several trades of how this actually works, bring it to the live market, and I'm actually going to show you here today how I'll bring it to the live market on all 6 of these currency pairs, show you how what we would have actually captured using this strategy during this morning's London breakout session here. So let's go ahead in here. Let me quickly explain to you how this actually works. Let me go ahead and bring this down here. What we have found, once again, because of that overlap, in fact, you have the Asian session overlap and the London session overlap, what we have found is that the market is going to form either its high or its low for the morning. Let me go ahead, I'm going to type this out for you here. I'm going to make sure everybody can see this here. It's going to form either its high or its low for the morning between 2 o'clock a.m. Eastern Time and 5 o'clock a.m. Eastern Time. Now, you might want to take into account for which time zone you are in. This is based off of the Eastern time zone here, but we're looking for the market either to pull back, form a low for the morning, and rally up, or we're looking for the market to rally up, form its high, and pull back. Now, once again, the reason for this is because you have the Asian session and the London session overlap right here. So we have found that between 2 a.m., 5 a.m., the market generally forms a high or low for the day. Now, what we're also finding here, at that point, then the market's going to rally up, and we're going to look for this market to form either its opposite high or low for the day. Let me type this out for you as well. We're looking for this to form between 8 o'clock a.m. Eastern Time and 2 p.m. Eastern Time. Now, once again, this is because you have the London session and the U.S. session overlap. So that's why I wanted to point out, showing you how these sessions work here and why this overlap works like this. So once again, we're looking for the market to form either a low or high between 2 a.m. and 5 a.m. I'm going to go into the market, show you how this actually happens, and then form either its opposite high or low between 8 a.m. and 2 p.m. For the day here. You might want to do a screenshot of that or write that down. Now, what we've also found is that in this market is that generally we're looking for an average daily trading range. The average daily trading range is usually between 50 pips and 200 pips, meaning that we're looking for this market, it's going to move in one direction, a minimum of 50 pips, and usually between 50 and 200 pips. So that's key, because what we're going to be looking at is a strategy here on each one of these currency pairs. We're going to be looking to go after first base, which is going to be 50 pips per currency pair. So let's go ahead into the live market here. If everybody has this written down here, understands this basic strategy, let's go ahead into the live market right now. Let's go in here right now. And I'm going to go ahead and pull this up here. Let me go ahead and right-click on this candle right here. We're going to go back to the beginning of March. You can see this is March 4th right now. I'll put that right there in the upper left-hand side of the corner of the screen right there so everybody can see March 4th. We're going to be basing this off of the 3 o'clock a.m. candle. So let's go ahead, let's type this off here. 3 o'clock a.m. Eastern Time. Once again, you'll have to take into consideration for which time zone you're in. In fact, in the live sessions here, our live analysts that could probably walk you through might be able to help you out with that as well. But we're basing this off of the 3 o'clock a.m. Eastern Time candle here. So right there is our 3 a.m. candle. And would everybody agree that based off of the 3 a.m. candle, the market formed its high for the day and it pulled back? It has this directional movement. Yeah, it forms a high. In fact, this went a little bit higher, 4 o'clock pullback here. Our 3 o'clock a.m. candle the next day. This is on March 5th right there. The market, in fact, formed its low for the morning and then rallied up. And then our next 3 a.m. candle, this is on March 6th. Market formed its high for the morning and then pulled back, just like that. Is everybody seeing that? Just going to type in a Y, type in yes if you do understand seeing here, based off between that 2 a.m. and 5 a.m. trading range here. It's going to form either its low or high, and it's going to have a directional movement. Now, I know some of you might be wondering, well, why does this happen? Why does this happen like this? Well, what we have found is that the European market, it processes the largest bulk of the Forex transactions during its period here. So the banks are processing their orders. What this happens is that it provides a huge injection of volume and directional movement into the market. So the strategy I'm showing you here today, this is going to give us the ability to take advantage of these directional movements. So what I'm going to do right now is I'm going to go ahead in here, and we're going to start off now with the 3 o'clock a.m. candle on March 9th. Let me show you the strategy of how we're actually going to trade around this. Now, I do want to go ahead and show you here, what I'm showing you here today is simply just the strategy of how you can do this. In fact, you could actually take this strategy, use it on your own, starting on Monday morning here. But I'll explain to you why it's important to get into our live market Forex sessions here, because prior to this close of this 3 a.m. candle, our professional analysts in these live webinars, they're going to be looking over the market. They're going to get an idea of which way the market is going. Then they're going to set up their trades. In fact, what they're going to do is they're going to look at each one of these here, these 6 different currency pairs, and they're going to say, hey, we're going to trade this one, we're going to trade this one, let's avoid this one, let's trade this one, let's avoid this one. So giving you a higher probability of success with your trades, utilizing the strategy I'm showing you right here. So once again, that's the key reason, trade live with a professional analyst here. But let's go ahead in here. Let me actually explain to you the strategy of what we're going to be using here. So let's start here. What we're going to do is we're going to wait for the close of the 3 a.m. candle. And what we're going to do, once we have that close of that 3 a.m. candle, we're then going to come in here, and we're going to set, in fact, let me zoom in here just a little bit here. Let me zoom in here for you just a little bit here. What we're going to do is we're going to set an entry buy position 10 pips above the high of that 3 a.m. candle. So in this case, right about there. There's 10 pips right there. And I'm going to type this out here. I'm going to go real slow on the first couple trades. Then I'm going to ask those of you here in the room that are getting it to go ahead and to respond back. I'll actually have you give me this information. So the entry buy is going to be plus 10 pips above the high of the 3 o'clock a.m. candle. Now, this entry buy position we're here, this is not an actual entry into the market. If the market crosses above this line, then we are actually in a market buy position. I'm going to explain that as we're going along here. Yeah, now let me go ahead and explain here. This is the British pound, Japanese yen, 60-minute time frame. So what this means, Winston's asked, is this an hourly candle? Yes. Each one of these candles represents 1 hour of time frame. So essentially what you're doing is you're actually you're setting this up at the close of the 3 a.m. candle, but it's actually 4 o'clock a.m. is when we're looking for the actual movement here. Just to give you a little bit more explanation. Once again, in the live sessions, they'll be able to better explain this for you. Now, we're also going to set an entry sell position 5 pips below the low of this candle. So we're going to come in here, just like this, and right there, entry sell. Once again, I'll type this out. I'm going to go nice and slow here. Entry sell is going to equal minus 5 pips below the low of the 3 o'clock a.m. candle. Just like that. So now, once again, both of these are simply pending positions. We're not in the market until the market breaks one of these lines here and actually enters us into the market here. So just to give you an idea here, I'm actually going to show you the strategy as we're going along here. So I'm going to clean up my charts here just a little bit here as we move forward here. So let's go ahead in here. Once again, each one of these candles is 1 hour of time frame. Let's go ahead and let's see what happens here. We now move forward, and then bam. The market now crosses over this line. Our entry buy, this now becomes a market buy position. What this means is that we've crossed over that line. And let me go ahead and explain to you these entry buy and entry sell positions. You're setting this in your broker's platform. They are not triggered until the market actually breaks and enters you into the market. So we are now in this market. We're now in a market buy position. We're now buying the market right there. What the first order of business is going to be to come in here and to close out our opposite order here. Now, Ripple brings up a good question here. Why not 10 pips below? The reason for this is we have to take into consideration for the spread. So what we're going to be doing here is we're going to be using an extra 5 pips above, and I'll explain that to you when we set our stop loss as well once again, the live analyst will be able to explain this to you in much greater detail. It's basically to take into consideration for the spread for those of you that have been asking that. So we're now in this market with a market buy position. First order of business, we're going to come in here. We're going to close out the opposite order. Now, once we close out that opposite order, in this case it was that entry sell position, we're now going to come in here and we're going to set a stop loss. Now, when we are buying the market, we're going to set our stop loss right at the low of that 3 a.m. candle. So let me go ahead and top that out. Stop loss when buying the market. It's going to be different when we're selling the market here, but stop loss when buying is going to be at the low of the 3 o'clock a.m. candle. Once again, when we're buying the market, we don't have to take in consideration for the spread. That's why it's going to be at the low. When you're selling the market, your stop's actually going to be 5 pips above the high. When we go into the market selling, I'm actually going to explain that as we're going along. So pretty simple strategy so far. We are now in a market buy position. We have our stop loss out at the low of that 3 a.m. candle. So what we're going to do right now is we're going to come in here, and let me explain to you that our strategy, our target, let me explain to you our target here. The target that we're going after is going to either be plus 50 pips minimum. Once again, the average daily trading range is at least 50 pips, so we're going for 50 pips minimum, or a 1-to-1 risk ratio, just like that. So let's come in here now. I'm going to take what's called my box information tool. It's going to measure the amount of pips we are risking on this trade. We are risking on this trade 36 pips. Now, with a 1-to-1 risk ratio, that means we would be going after 36 pips. However, our minimum is 50 pips, so we're now going to set our target at 50 pips. Simply come in here, and our target that we're going after is going to be right about there. So 18292. So 182. Actually, let me go ahead. Let me remeasure that. It's here. Let me pull this back out. Make sure I'm doing this right. So we have 50 pips. So 18292. Right about there. So we're going after 50 pips. Let me edit this here. So our target is 50 pips. It's getting on first base, that 1-to-1 risk ratio. So let's go ahead into the market now. Once again, each one of these candles, 1 hour time frame. Let's see what happens here. 1, 2, 3, 4, 5, 6, 7. 7 hours later, we then hit our target. Now, this target you're setting right here, this limit, this is set in your broker's platform. So it's not like you're actually in here watching the market. You can actually come in here and watch the market. But what you're simply doing is you're coming in here, set it and forget it. You just simply go about your day. Those of you who are in our time zone, maybe you go back to sleep. Maybe you work on that type of schedule based on where you are in the world. So we just rallied up here. We just hit our 50 pips. So we just captured 50 pips on that trade. Now, for those of you that are paying attention, you're wondering what our profit was on that. With a mini lot, trading mini lots at $1 per pip, that means we just made $50 on that trade. For you standard lot traders, now standard lot is the standard by which most traders strive to achieve, we just generated about $500 in profit off that trade, trading a standard lot. Now, how many of you be okay with that? How many of you be okay placing this trade, 7 hours later, you walk away, you just captured 50 pips, you just generated $500 of profit, simply based off this simple strategy on one currency pair here? Yeah, I get a lot of you saying yes. Jack says yes, Mark says yes, Donald says yes. So yeah, so very simple strategy. I just showed you here on one simple currency pair here. What we're going to do right now is let's go ahead, let's advance this now. Let me clean up my charts. Let me delete all this here. Let's delete all this here. And I'm going to show you this on a couple different trades here. So we're now looking for the close of that next 3 a.m. candle. For time's sake here, I've gone ahead in here, and I've just gone ahead and I've marked where each one of these 3 a.m. candles are. So now we are on March 10th. This is the Tuesday of that week, going back about 2 weeks ago here. On Tuesday, we have now identified the close of this 3 a.m. candle. Once again, the professional live analysis, the analysts are going to be in the live market here. They're going to be setting up these trades, letting us know whether we're going to be placing this trade or not. But yeah, it's a very simple strategy now. We now identified the 3 a.m. candle. And I'm going to go ahead and I'm going to walk you through this trade as well. The first order of business at the close of that 3 a.m. candle, we're going to come in here. We're going to set our entry buy position 10 pips above, right there. And I'll type this out for you again. So entry buy is going to equal plus 10 pips above. And once again, this is simply only a pending position. We have to wait for the market to break and cross over that. Now, we're going to come in here, set our sell position, our entry sell position 5 pips below. So we come in here, so 1, 2, 3, 4, and right about there. There's going to be our entry sell right there. Once again, simply a pending position until the market crosses, and it's minus 5 pips below the low of that candle. So we have our entry buy set, entry sell. These are set in your broker's platform. They are pending orders. Wait until the market actually crosses over here. So let's go ahead and here. Let's see what happens here. Stuart says, can you show us today's trade? Stuart, I'm going to bring this to the live market. I'm going to show you this morning's trades on all 6 currency pairs. Don't worry, I will bring this to the live market. I'm going to show you this because you might be actually blown away. I see some of you are saying, well, hey, how reliable is this here? I'm going to actually show you. I'm going to actually show you the trades here going back to the beginning of the month on this one here. I'm actually going to show you the trades from last night on all 6 of these currency pairs. Wait till you see what happened there. So we're going to go ahead here now. We're now waiting here for the market to break and enter us into the market. So let's see what happens now. Bam. Next candle, the market now crosses our entry sell. We are now in an actual market sell position. We're now in an actual market sell position right here, meaning that we are now actually shorting the market right now. Now, I know some of you might be scratching your heads here. Some of you might be scratching your heads wondering, well, can you actually short the market? Absolutely. If you want to learn how to do this, we can teach you how to make money in this market when it's going up and when it is going down. It's called shorting the market. Now, in this case right here, we're now in a market sell position. First order of business, just like we did the previous trade, we come in here, we're going to cancel the opposite order. We cancel that opposite order because we're actually shorting the market right now. Now, here's a little bit different now. When we're going to set our stop loss, we're going to set our stop loss 5 pips above the high. So we're coming here, 1, 2, 3, 4, 5, right there. Now, the reason for this is we have to take into consideration for the spread. Once again, we'll give you a little bit more detail in our live market sessions here. So stop loss when selling the market. Stop loss when selling the market is 5 pips above the high. Once again, take into consideration for the spread. So stop loss when shorting the market is 5 pips above the high. So let's go ahead in here now. We're now in a selling position. We've entered the market shorting the market. We're now looking at here what type of risk. I'm going to pull up my box information tool here, and we're risking 30 pips. Now, with a 1-to-1 risk ratio, that means we would be going after 30 pips. However, once again, our minimum, our first base target is going to be 50 pips right there, 183.06. So here's our target, 183.06 right there. So the target, once again, in this case, we're going after a target is going to equal plus 50 pips because it's a little bit less than a 1-to-1 risk ratio. So minimum 50 pips first base trade right there. So Vic says that this should be very easy to backtest. Do we have a multi-year? Vic, I'm actually going to bring this. I'm going to show you here what this would have done on this one currency pair for the month of March, show you what it did for last month. That's why we give you a money-back guarantee in getting into our live market sessions here, because you actually get into these live sessions, actually see here how you're able to actually trade this with a live professional in the live market. So once again, completely risk-free to get into these live sessions. I'm actually just showing you the strategy right now. So we're coming in here now. We're in a market sell position. We're going after our first base target right now of 50 pips. So let's see what happens here. Next candle, 1, 2, 3. 3 hours later, the market pulls back, hits our target right here. We are now out of that position. Once again, this is a limit set in your broker's platform. We just captured another 50 pips on that trade. So right now, this is going back to the beginning of March here. First 2 trades of that week right now. On March 10th, we captured another 50 pips. So far for this week, we're up about 100 pips, $1,000 so far. How many of you are liking this strategy so far? Just go ahead and type in a me, type in a yes. So far, this seems like something that's pretty straightforward, pretty easy to use. Yeah, Johnny says yes, Norman does, Anthony does. So what I'm going to do right now is I'm going to go ahead here now. I got it, let's see, I still have a little bit of time here. Let me show you a couple more trades here, and then we'll bring this to the live market. Let me delete all this for you here. Yeah, a lot of you are saying, how do I get involved? Don't worry, I'll show you here in just a moment how we can actually get involved with this here. So we're going to bring this now to the next 3 a.m. candle, which is right about right there. So here we are now, March 11th, 3 a.m. The reason I'm showing you this right here, March was very good with the pound yen here. In my live webinars, if you've been in some of my live webinars, you see here I was actually showing this live moving forward. That's why I'm just going back here. Some of you wonder, why am I going back to the beginning of March? I'm just going to show you these several trades here, bring it to the live market, show you how successful this has been here, and then show you the trades from last night, showing you if you had gotten involved last night and trade this, what you've been able to accomplish here. So let's go in here. Let me quickly now. We're going to come in here, once we've identified the close of that 3 a.m. candle, we're going to come in here, we're going to set an entry buy position. How many pips above the high of this candle? Go ahead. Let's see who's been paying attention. How many pips above the high of this candle are we going to set our entry buy position? Yeah, Doug got that right. Mark did. Donald, yeah, Kathleen, yeah. We're coming here 10 pips above. So we come in here. So right there, entry buy. I'll type this out again. Entry buy equals plus 10 pips above. Yeah, so Kathleen got that right. Adam did. John did. Great. So yeah. Now, how many pips below are we going to set our entry sell position? How many pips below this candle are we going to set our entry sell? Yeah, Anthony got that right. Johnny did. Glenn did. Yeah, so we're going to come in here 5 pips below, right there. Right there is going to be our entry sell. Yeah, Danny got that right. John did. G, Zamil, great. So entry sell is going to equal minus 5 pips below. Great. I appreciate those of you who are responding, interacting, and helping me out with this right there. So yeah, entry sell, entry buy, 10 pips above, 5 pips below, pending orders right now. Let's go ahead in here. Let's see what's going to happen now. Now the next candle, next hour, the market does in fact pull back, triggers our market sell position right here. So we're no longer in an entry sell position. We are now in a market sell position, meaning that we are now shorting the market right here. Now, but first order of business, what are we going to do once we actually enter into the market? What is the first order of business after we actually enter in? Yeah, we're going to come in here. We're going to cancel this opposite order. So we come in here, we cancel that opposite order because we're in a market sell position. We are now shorting this market. Now, after we actually delete that previous order, we're going to come in here. We're going to set a stop loss. Now, the stop loss when we're shorting the market, how many pips above this high are we going to set it? Yeah, we're going to set our stop 5 pips above. Adam got that right. Ronald did. Douglas. So we're going to come in here. We're going to set our stop loss 5 pips above here. So we come in here and right there. I'll take this out as well. We're going to go a little bit quicker when I go past this one here. So stop loss when selling, and that's called shorting the market. That's going to be plus 5 pips above, just like that. So we take out what's called my box information tool, and we're going to measure what our risk is right here. So we are risking 31 pips. However, how many pips at a minimum are we going after? How many pips is first base? Go ahead. Let's type in here. Let's see what's going to happen here. So yeah, Anthony says 50. John says 50 here. So let's go ahead. Let's see what happens here. We go ahead. We're going to set our target at 50 pips. So right there, 50 pips, 182.21. So 182.21 right there is going to be our target, and the target is going to equal plus 50 pips at a minimum. Now, a lot of you are asking some really good questions here. Now, for instance, Ripple says here, what if it whipsaws and we're both positions here? Well, obviously, it's going to trigger one or the other, and in the live webinars, they're actually going to help you with this. And some of you say, well, hey, can you trade this around announcements? That's the other neat thing about this. In fact, before we place this trade here, what if we were to come in here and maybe there's going to be an announcement? What if our professional analysts, before we place this trade, say, you know what, let's avoid placing some of these trades around that announcement. That's the big thing, once again, about that mentorship program, the live trading session. We're also going to help you avoid some of these trades if there is a pending announcement coming up here. So let's go ahead in here. Let's go back here into the live market here. And in this case right now, we are in a market sell position. We are going after 50 pips. Let's go ahead. Let's see what happens here. So next candle, bam. Next candle takes us out. We have just lost 31 pips on that trade. So minus 31 pips would equal a loss of $31 for you mini lot traders, or a loss of $310. Now, the reason I'm pointing this out is that you are, as I pointed out before we went into the market, you are going to incur losses in your trading. However, a loss of 31 pips compared to the two previous trades, we're up 100, lost 31. This week alone, we're still up 69 pips for the week. How many of you would be okay with that? How many of you would be okay taking a small loss of 31 pips if you're still profitable 69 pips for the week? Yeah, absolutely. In fact, if you were to go back here, if I showed you these three previous trades here, you would have captured 50 pips, 50 pips, 50 pips. So that's an extra 150 pips that I didn't even add into this here. So yeah, a lot of you are saying yes. So once again, some of you are saying, well, how successful is this strategy here? I found about an 80% success rate using the strategy. Obviously, you're not going to win every single trade. However, once again, our professional analysts are going to help you avoid some of these losses. In fact, this one here, based on maybe an announcement or something like that, we may have helped you avoid this trade here. So what I'm going to do is I'm going to go right in right now. I'm about to run out of time. I'm going to run out of time here. I want to show you something special here. Let's go ahead. Let's delete all this here. But before we go ahead and move forward to the next one, how many of you could see yourself doing this? How many of you feel this is a pretty simple strategy, especially if you have a live professional analyst walking you through this before you even place your trades? Does this seem like something that's easy enough that you could do? Yeah, I'm getting a lot of you saying yes. Let's go ahead. Let's bring this now to the next trade here. This would have been on March 12th here, our 3 a.m. candle. I'm just going to start going a little bit quicker here. Let's show you here what this would have done here, because I see some of you saying, well, hey, yeah, this is back test. So let me show you what this would have done here. We're going to come in here. We set our entry buy position here, 10 pips above. So we come in here, let's see, 88. There's our entry buy. And our entry sell is going to be 5 pips below. So we come in here right about, let's see, 1, 2, 3, 4. Right about there is our entry sell. So we come in here. We set our entry buy, entry sell positions here. Let's go ahead. Let's see what happens here. Next candle, bam. We are now in a market sell position. So market sell position. We're now in the market, shorting the market right there. And Elaine says, out of 10 trades, how many were winners? Alan, I'll actually bring this here. I'm actually going to show you here. Actually, what this was is that last time I checked, I think we had about 11 out of 13 successful trades in the month of March. But let's bring it to the live market here. Let me see how many winners we actually did have here using this strategy going back to the beginning of March here. So we're in a market sell position. We're going to exit our position right here. Bam. We go ahead. We delete our entry buy position. And when we are selling the markets, we're going to come in here and we're going to set our stop loss 5 pips above. So let's come in here right there. There's our stop loss. We are risking 46 pips, so we're going after a minimum of 50. So right there, 180.87. That's our target. So 180. Let's see, 180.87. Right there. So there's our 50 pip target. Let's bring this forward here. 1, 2, 3, 4, 5. 5 hours later, we just captured another 50 pips. Not too bad for the week so far. Actual trades you could have placed about 2 weeks ago in the month of March here. You're now up 150 pips. You lost 31. So what? That's about, 119 pips so far that were positive so far. So let's go ahead here. Let me show you one more quick trade here, and then we'll just quickly walk this to the live market. And I'll actually show you what this did on all 6 currency pairs last night. I see some of you saying, yeah, can you show us the actual live market? Don't worry. I'm going to bring us there here in just a second here. So there's our 3 a.m. candle. And we set our entry buy 10 pips above. There's our entry buy. And there's our entry sell. 5 pips below, so 39. So it's going to be, what, about 35. Let me change the colors to make this consistent for everybody here. There we go. So we have our entry buy and entry sell positions. So let's go ahead and see what happens here. Next candle, right there we enter into the market. We're now in a market sell position right there. So there's our market sell, shorten the market right there. There's our market sell. We delete our previous order. We come in here, set our stop loss 5 pips above. So let's come in here, set our stop loss. Let's see, 1, 2, 3, 4, 5, right about there's our stop loss. we are going after, let's see, we are risking 44 pips going after 50, so right about there, 17986 is our target, 17986, just like that. So let's go ahead, let's see what happens here. Next candle, 1 hour later, bam. We just captured another 50 pips. So how many of you would like to have been able to do this for that week? We were successful on 4 out of 5 trades. So that's an 80% success ratio using what I just showed you here. That's going back 2 weeks ago. How many of you would love to be able to do that? Yeah, so once again, I just showed you here. So those are saying right now, how many trades have we been successful so far? So we would have been successful 1, 2, 3, 4, 5, lost on that one, 6, 7. So 7 out of 8 trades. Let's go ahead, let's bring this to the live market now. And let's see what we would have done here. Let's delete all this here. Let's bring this to the live market. So there's our 3 a.m. candle. The market pulls back. The next trade, oh, sorry, no, actually there's the next trade right there. That trade, we would have won 50 pips. The next 3 a.m. candle, another 50 pips. So that's, is anybody keeping track here? I'll go back and I'll add these up here. Let's see here. We have the next one. There's our 3 a.m. candle. Market pulls back. Another 50 pips there. Now, some of you are asking, what about a trailing stop? A trailing stop here, actually, you can actually use a trailing stop. You actually go after more of this here. So let's go ahead in here. Ted says, I bet we're not going to see, Ted, I'm bringing it to live market. Hold on here. Let's see here. So we're going to bring this now. There's our 3 a.m. candle. And in this case right here, I think that would have been 50 pips. Let's see what we would have had here. Let's see, probably right about there. Yep, we would have captured 50 pips on that one. There would have been 50 pips on that one when it goes up. And let's see here. We got right there. So there's our next 3 a.m. candle. Market goes up. How many of you are starting to see a repeating pattern right now? Once again, this is the actual live market, what the market did using this strategy here. So let's see here. We got our 3 a.m. candle. Market pulls back again. Now, you're not going to be successful every single time. I don't want to come in here and tell you you're going to be successful every time. In fact, this one right here, that one probably would have been a loss. So we would have incurred a loss right there from the looks of it. I'm just saying we'll call that one a loss. Let's see here. There's our 3 a.m. And in this case right here, we would have got, let's see here. We got 50 pips. We probably would have incurred a loss on that one. There would have probably been a loss. And then let's see here. There's our 3 a.m. candle. That would have been a win right there. And, okay, so those of you wondering about the live market, right there, this was the actual trade right from last night. This is this morning. There is the live market. Here is our 3 a.m. candle. So on this trade right here, we come in here 10 pips above. Let's see, right there. So 10 pips above, right about there. 5 pips below. Let's see, right about there. So we would have been in a market buy position. The market goes up. We set our target 50 pips above. So we come in here, let's see, we're going after 50, so right about, yeah, so right about there. So there would have been our trade from last night. There would have been our target. There would have been another 50 pips right there. Just like that. So once again, you can come back in here. You can see here, right there, this is off the pound yen, and we were successful. 1, 2, 3, 4, 5, 6. Actually, I got to back this up even more here. I'm sorry, I didn't add in all those. Let me see here. So let's see here. 1, 2, 3, 4, 5, 6. We were lost on that one. So 5, I think 6 trades. And you can get the idea. You say how many we won, how many we lost. It looks like we lost 3 out of all those trades right there. So right now, let's go ahead into the actual live market. Let me show you here. Martin says stopped out on us. We actually wouldn't have been stopped out because we wouldn't have actually entered into that trade right there. So let's go ahead. Let's bring this to the live market here. Here is the pound Australian dollar right here. We would have entered on the 3 a.m. candle. 50 pips right there. Let's see here. On the pound US dollar, there's another 50 pips. Let's see here. On the pound Canadian dollar, 3 a.m. candle. Let me delete that here. So, oops, sorry about that. Let me go back to that one right there. So there's our 3 a.m. candle. Market rallies up. We capture another 50 pips on that one. I just showed you the pound yen. Here is our pound Swiss franc, another 50 pips, and on the pound New Zealand dollar. Once again, there's the live market. We would have entered at 10 pips above. We caught 50 pips. So each one of the 6 currency pairs last night, you would have been up about 300 pips simply trading off of those 6. So how many of you are liking this strategy? How many of you are seeing yourself doing this type of strategy if you were to have